Ladies and gentlemen, welcome to this comprehensive educational exploration of XRP's ecosystem, market indicators, and analytical frameworks. Today is November 16th, 2025, and XRP is currently trading at $2.19 per token. In this detailed session, we'll systematically review recent on-chain developments, the implications of the newly launched US spot XRPET, network upgrades on the XRP ledger, community-shared data points from public discussions, and various modeling approaches used to evaluate long-term potential. Please note from the outset, this entire presentation is strictly for educational and informational purposes. It does not constitute financial advice, investment recommendations, or endorsements of any kind. Cryptocurrency markets involve substantial risk and volatility. Always conduct thorough independent research, verify data from reliable sources, and consult with licensed financial professionals before engaging in any market activities. To provide a structured foundation, let's start by outlining the agenda for this extended analysis. We'll first examine the factual details surrounding the XRPC spot ETF launch, including reported trading volumes and broader context within the regulated investment product landscape. Next, we'll delve into on-chain metrics such as transaction volumes, wallet distributions, and liquidity flows, drawing from publicly available blockchain explorers and analytics platforms. From there, we'll explore the technical architecture of the XRP ledger, highlighting consensus mechanisms, recent protocol amendments, and emerging use cases in decentralized finance and payment systems. We'll then review a selection of analytical models discussed in educational community forums, including utility-based valuations, network effect theories, and historical comparative studies. Throughout, we'll incorporate verifiable data points from today's public X posts and reports to illustrate ongoing discussions without speculation. Finally, we'll address common analytical misconceptions, risk considerations, and a balanced recap of key takeaways. Beginning with the ETF development. According to reports from established cryptocurrency news outlets such as CoinDesk and CryptoPotato published earlier today, the XRPC spot ETF commenced trading with an initial volume of approximately $58.6 million. This figure reflects the aggregate trades executed on the debut day within a broader market environment, showing downward pressure across multiple assets. Spot ETFs track the underlying asset's price directly through physical holdings, differing from futures-based products in their exposure mechanism. In the context of cryptocurrency adoption, such vehicles have historically facilitated participation from traditional financial institutions by offering a familiar regulatory wrapper. For XRP specifically, this marks the first approved spot product in the US market, following prior regulatory resolutions. Additional filings, reportedly around 18 in various review stages, could potentially expand the ecosystem if approved, though timelines and outcomes remain subject to regulatory processes. Transitioning to on-chain observables. Blockchain data from platforms like XRPL services and third-party aggregators indicate heightened activity among large holders. Specifically, the number of transactions valued over $1 million reached a 4-month peak, with approximately 716 such movements recorded in recent sessions. Holders in the 1 to 10 million XRP bracket executed transfers totaling around 200 million tokens over a 48-hour window. Exchange deposit metrics suggest these flows contribute to overall liquidity rather than indicating mass exits. Price action has consolidated with identifiable support zones between $2.05 and $2.15, while overhead resistance appears near $2.48 based on order book depth and historical levels. Technical indicators, including the relative strength index on daily charts, show formations of higher lows amidst price compression, a pattern sometimes interpreted in technical analysis education as potential divergence. The XRP ledger itself warrants an extended technical overview for educational clarity. At its core, the XRPL employs a consensus protocol known as the XRP Ledger Consensus Algorithm, a federated Byzantine agreement system. This enables transaction finality in 3 to 5 seconds without energy-intensive proof-of-work mining. Validators, currently over 150 unique nodes distributed globally, must achieve supermajority agreement on ledger versions, providing fault tolerance against up to one-third malicious participants. Anyone can operate a validator with modest hardware, contributing to decentralization metrics. Cost efficiency stands out. Average transaction fees hover below 2 cents, even during peak loads, due to built-in fee escalation mechanisms that prevent spam without pricing out users. Recent protocol enhancements have expanded functionality significantly. The XLS20 standard, implemented years ago, introduced native non-fungible tokens with features like automated royalties and mutable metadata. More contemporarily, the XLS30 amendment activated automated market makers, creating decentralized exchange pools for token pairs. This has led to over $100 million in total value locked across liquidity providers, enabling yield generation through fees. The Hooks Amendment, now live on mainnet, allows lightweight smart contract-like logic directly on accounts, executing code triggers for events such as payments or offers. These developments position the XRPL for broader applications beyond simple transfers, including decentralized lending protocols and Oracle integrations. Use case education extends to Ripple's enterprise solutions. The on-demand liquidity product leverages XRP as an intermediary asset for cross-border settlements, sourcing liquidity from digital asset exchanges to avoid pre-funding Nostros accounts. Public disclosures indicate integrations with over 300 financial entities worldwide, spanning banks, remittance providers, and payment processors. Examples include collaborations with institutions in regions like Asia-Pacific and Latin America for corridor-specific efficiency gains. While not all corridors mandate XRP usage, the option provides settlement speed advantages over traditional correspondent banking networks. Community-sourced insights from today's X platform add layers to this educational review. For instance, accounts focused on data aggregation shared metrics on network growth. Active addresses have risen approximately 150% year-to-date, with transaction counts reflecting similar expansion. Discussions around escrow mechanics clarify that 1 billion XRP tokens release monthly from Ripple-managed accounts, with historical patterns showing the majority re-escrowed or utilized for ecosystem development rather than market sales. Analytical threads explore supply dynamics, noting circulating supply at roughly 56.8 billion tokens against a maximum of 100 billion. Valuation modeling education covers multiple frameworks. Utility models estimate potential transaction demand by referencing the global cross-border payments volume, estimated at $27 trillion annually, through systems like SWIFT. Capturing even fractional percentages would require corresponding XRP liquidity, though actual adoption depends on implementation scales. Network effect models apply Metcalfe's law, positing value proportional to the square of user connections. Relevant, given DeFi protocol growth and wallet activations, stock-to-flow analogies, while more common in proof-of-work assets, are adapted by some to consider escrow release schedules as a form of programmed issuance reduction. Historical educational parallels draw from the 2017 market cycle, where XRP appreciated from sub-penny levels to over $3 amid exchange listings and regional trading volume surges. Key differences today include matured regulatory frameworks, institutional product availability, and enhanced protocol capabilities. Post-2018 bear market recoveries in similar assets often followed capitulation phases, with technical patterns like golden crosses preceding sustained moves. Risk education is essential for balanced understanding. Volatility remains inherent. XRP has experienced drawdowns exceeding 90% in prior cycles. Correlation with Bitcoin and broader risk assets means macroeconomic factors, interest rates, liquidity conditions, geopolitical events exert influence. Leverage trading amplifies losses, and exchange counterparty risks persist despite improvements in custody solutions. Regulatory changes in any jurisdiction could impact liquidity or product availability. Addressing analytical misconceptions educationally. Claims of centralization often stem from Ripple's escrow holdings, yet validator diversity and open source code enable independent operation. The ledger has functioned without Ripple involvement in core consensus for years. Another point, ETF inflows do not guarantee immediate price equivalence due to creation-redemption mechanics and market maker arbitrage, which occur over settlement periods. Extending the technical depth. Sidechain developments include EVM compatibility layers, allowing Ethereum virtual machine smart contracts to interact with XRPL speed and costs. This bridges liquidity between ecosystems, with projects deploying wrapped assets and cross-chain transfers. Oracle integrations via the XRPL's built-in decentralized exchange feed, real-world data for conditional executions, security audits for amendments undergo rigorous community review, with bug bounties incentivizing vulnerability disclosures. DeFi ecosystem growth metrics. Protocols like Sologenic offer tokenized stocks and commodities trading settled on XRPL. Casino finance and other lending platforms provide borrowing against XRP collateral at variable rates. Total unique minters for NFTs exceed millions, demonstrating scalability for digital ownership use cases. Macro context education. Central bank digital currency pilots in over 100 countries explore blockchain rails, with some referencing ISO 2022 messaging standards, native to XRPL implementations. Tokenized real-world assets represent a projected multi-trillion market by 2030, per industry reports, favoring efficient settlement layers. Community data points continued. Metrics on short-term holder accumulation show net increases despite price consolidation. Dormant wallet revivals contribute to velocity calculations in analytical models. In summary of this extended educational review, the spot ETF introduces regulated exposure. On-chain activity reflects institutional scale movements. XRPL upgrades enable diverse applications. Modeling frameworks vary by assumptions. Risks demand prudent management. All data presented draws from public sources for verification. This content remains purely educational. No financial advice implied. Verify all information independently. If this detailed analysis enhanced your understanding of XRP's technical and market aspects, please like the video, comment with a specific XRPL feature you'd like explored next, subscribe for ongoing educational series, and share with fellow learners in the cryptocurrency space. Stay curious, research diligently, and prioritize risk awareness in all endeavors.